What is going on, everybody? Welcome to this edition of Market Talks. I am your host, TA Tim from the Coffee and Crypto channel. I'm so excited to be here with you guys here on the Cointelegraph channel, though, whatsoever. So before we even get going, make sure to smash that like, subscribe to the channel. If you love content that brings you weekly updates on everything happening in the crypto space that you need to know about, and you get to hear from some of the most phenomenal guests, experts of their field. And I'm super excited today to have Yashu Gola here with me. He is a Mumbai-based financial analyst and technology journalist with a strong focus on Bitcoin, smart contracts, exchange assets, NFTs, commodities, and the global stocks. He has been covering the cryptocurrency industry since 2014, so he knows what he's talking about. Let's go ahead and roll his clip. Yashu, how are you doing today, my friend?
Hi, Tim, and thank you very much for that cool intro. I'm just feeling very happy to see that and so excited to be here.
Yeah, man, I'm excited about this. Again, even just reading about who you are and how much you've done, I'm just like, I love hearing, first of all, from people who have been in the crypto space for a long time. Myself, I came in during the last bear market, so I haven't gotten to fully live through the longevity of what it looks like to go up high into a bull market, down into a bear market, and then ascend once again. So I love hearing from people with your take, but then you just look at those other credentials you got, and it's primed for an amazing episode of Market Talks. But I'm going to dive in here with you, man. We're going to go ahead and just jump into the deep end. What is on the peak of everybody's mind right now? We just had that meeting, the FOMC meeting with interest rate hikes once again. And while a lot of us expected the 75 number to come out, it was the remarks by Jerome Powell that might have been the most interesting. I want to start off by just open-endedly asking you, what were your overall thoughts about that Fed meeting and what should we be expecting moving forward?
Well, just as you said, Tim, I think we all were anticipating 75 BPS rate hike, and some of us were scared about 100 BPS. So fortunately, that did not happen. And yeah, I was particularly surprised by the bluntness of Federal Reserve's Chairman Jerome Powell, and how he came up, with the terms that the U.S. economy is actually suffering, and it's going to suffer because of their rate hike policy further. So for me, I think the biggest takeaway was when I see their projected policy rate for 2023. I mean, you might know that they are now up from 3.8% to 4.6% by the end of 2023. That is actually 0.1% higher, which is a very little thing, but it's what the future market was predicting, but it's still within the frame of what people were anticipating. And for 2022, meanwhile, their target is about 4.4%. So given we are at 3.25% right now after the latest rate hike, I think Fed is doing everything it can to bring the inflation down, at least for this year.
Yeah, no, I agree. And I think that's really interesting because here's where I'm kind of coming at it. I was under the impression that was the expectation, is that we'd keep raising. I do think that potentially the market and a lot of retail investors are a little scared this morning. I think a lot of people thought that we might get a break a lot sooner than we did, but Jerome was very adamant that we are going to do what we have to do. There's going to be some pain, but we're going to tackle this inflation regardless of how it will affect people. Now, he was conscious. He said, I know this is going to affect families. I know this is going to affect jobs, but we've got to tackle this inflation. What was your takeaway? I walked away from the meeting feeling like this was a good thing, but I know others are a little bit more bearish and thinking this has a negative outlook long term. What are your thoughts? Do you think that was a good announcement, or it's going to be sending markets down soon?
Well, Tim, this is the first time I'm looking at Powell being, like I said, blunt about what lies ahead. And if I recall correctly, I think he's learning a great deal with, from one of its predecessor. So let's travel back in time and take you to August of 1979. So at back then, the inflation in the US was more than 11%. And then there was a Fed boss called Paul A. Volcker, and he had the task of bringing inflation down from that, tropospheric levels. So by 1983, Volcker managed to bring the consumer prices down to 4%. But yes, his effort left behind two economic recessions and sky-high unemployment levels. But no, raising rate, what Powell is actually doing is right now is simply following the same philosophy. So he's coming to the terms that yes, we'll have to see some pain in the market. We'll have to make people poor. We'll have to suffer higher unemployment. But his foremost and first task is to bring the inflation down without giving any thought to other things, which is what Paul A. Volcker did. So I think that entire era of higher inflation and the rate hike really served as a good case study for all of us in the crypto space as well, which is why I started studying back there. I started looking at it, and the policies are quite similar. So this is why I believe that what happened during the markets in 1980s when the hawkish policy were really hurting the economy, the same thing is going to happen this time.
Wow. Yeah, no, I mean, and here's the thing, like we I kind of referenced this a little bit when we were talking before the show, and we'll kind of stay brief here, and then we'll keep moving on. One thing we knew kind of for certain from Jerome Powell was it does look like the housing market, is going to be seeing a drop. I think numbers that a lot of people are throwing out there is about 20%. We're going to see housing market drop by 20%, and that's something that Jerome was kind of direct about on housing and about jobs and stuff. The question, though, on I think everybody's mind is what we just heard from him implying that the stock market and crypto, namely Bitcoin, does it have further to go to the downside, or can we hold that 17.6 on Bitcoin and just range sideways for a while before things start to get better?
See, the rate hike is clear. I mean, when you look at something like a housing market, which is always in demand, when you were predicting that is going to fall by 20%, it simply translates to one thing, that people do not want to spend money at this time. Because there's also one more thing, the rate will be higher, so the mortgages will also rise up. So there is no point investing in something on which you'll have to pay some fixed, not floating, fixed rate for the next multiple years. So I think the demand for housing market is, technically it has to go down because of the higher interest rate. And stock market and Bitcoin and crypto, they are not left anyway. They'll have to face the same consequences. We are looking at a time where we are talking about recession, we are talking about the prospect of unemployment, higher unemployment. So what does happen? What really happens is that all the retail investors and even the institutional investor, they like to hold as much cash as they want because they wait and they save for the worst day. For companies, it's about acquiring so that they can have enough cash to run the business, and they cannot be in hard assets such as stocks, such as real estates, and the same goes out for retail investors as well. So what's really happening is because of this housing prediction that it's going to crash by 20%, I think stock and Bitcoin will have similar consequences.
Okay. And when you're saying similar, you mean similar to the housing market and going down potentially as far as 20%?
See, we cannot predict the number because I think each market has a different set of volatility. It has a different set of supply and demand structure. So, but yes, what we can really look is that whatever that rallies very high, very widely during the easing, first the hardest, because it has the most profit to offer you. Even if I compare today's Bitcoin price to March, we are still up. We are still up by a lot. So that is why Bitcoin actually gives me more opportunity to take good enough cash out compared to stocks, and that also applies on housing market. So which is why I think if you're talking 20% about the housing collapse, I think Bitcoin will have more than that, at least by 40% in that case. I'm just giving a rough number, but it has to be like that.
Okay, well let's go ahead and I know you have some charts available for us. Let's talk about Bitcoin price here for just a second, and let you maybe go through some charts here. What are your expectations for Bitcoin now that we have this news? And we're going to continue. We have some other questions about the Fed numbers as well and what you're thinking they will do to the space. But let's start with your chart. What are you seeing for Bitcoin's future in terms of price action?
All right, so I'll just share this chart right away. So I'm kind of mixing two things here. I'm mixing a bit of fundamentals with technicals here, which I always do. So because of the rate hike fears, I mean, all this time, you're looking at this crash from the beginning to here. It's like more than 60% already. And all this period, we have seen Federal Reserve increasing their rate hike. So we already know that what Bitcoin is about to do when in a higher interest rate environment. And all of this, during the time of this downtrend, we have also seen many indicators, technical indicators flashing. Like, for example, in December 2021 to April 2022, we had, which some would look like a bear flag. What really happened, according to the technical theory that defines it, we had a fall. This is the downside target, and we actually reached here quite easily.
Hmm.
So what's really happening that technical indicators are being suited due to this interest rate environment. So whenever we're listening to a bad news, these technical indicators are also working according to the plan, theoretically. So right now we have a similar problem here in the name of this cup and handle pattern. So what really happens in the cup and handle that once this is the neckline. So once the price
Hmm.
break below this neckline, which has happened right away, if this breaks below this neckline, which is around 18,505, the price theoretically needs to fall by as much as the height of this cup, which bring us to almost to $14,000. And this is the projection for the end of this year, coupled with all the fundamentals I discussed in the previous, in the previous questioning. So, which is why I think that we have to see more pain. There is, more credibility to this model because of what we have seen. For example, this bear flag. So, I think we should be prepared for a drop toward $14,000.
Mm.
Let's go
I love
back.
that
Yeah.
the reverse or inverse cup and handle formation. I had not seen that. I love technical analysis. I love looking at the charts. I had not seen that, but you make a very compelling point. Now, here's what I will ask you as a technical analyst. Your projection there, you use the full length of the cup. How do you project this? I've seen some analysts use just the length of the handle. Why is it that you use the full length of the cup and not just the handle?
Well, I'm just following, the patterns that has appeared before this because any technical pattern, it is shaped after studying similar pattern across the ages. So even if you look at, great analysts like Thomas Bilkowski, who has studying these patterns for a long time, so we find out that whenever these patterns form, most of the time, I'm talking about 71 to 78 times,
Mm-hmm.
the percentage, the successful percentage at which the price meets the profit target up and handle is actually equal to the height between the cup's peak and the cup's bottom. So it's not something that can be, that can be explained by a secondary analyst like myself, but we are simply
Mm.
following all the data that is available and their outcome.
Yeah.
Because it has happened 79% times, it's the probability of it's happening 79% in the future increases.
Man, that's good stuff, man. I love seeing that. I love listening to other analysts. Let's jump back now that we kind of have a price target potentially for Bitcoin. Again, that's pretty similar. I've heard people talk about 15, 16. Some people are going down to 12 and 11. But 14 is a good little number to keep our eyes on. Let's go back to the Fed and let's just talk about the market as a whole. Because I think something you said earlier was even if the price does drop to 14 in the long term, prices, if people are DCing and buying right now, that's still a good purchase long term. Let's talk about the space. Do you think, when we're going back to Jerome Powell and the Fed, do you think there's still a chance, an outside chance, that we somehow manage a soft landing? It doesn't sound like Jerome Powell has shut that conversation down, although it does look like it will be a slim chance. What are your thoughts about that?
I don't think Powell and his officials can give the economy a soft landing. And again,
Mm.
I'm taking the example for the Volcker times when I told you that there were two economic recessions during the period of rate hikes when the inflation was above 11%. Now we are fighting an inflation about 8.3%, and we have to bring it down to 2%. That's a big gap. And which is why I totally think that it cannot be a soft landing. And looking at Powell's recent statement, I mean, look at their words. They agreed that in 2022, the GDP growth will be, they have downgraded the GDP growth from 1.7% to
Mm-hmm.
0.2%, which is too much. And meanwhile, in 2023 also, they have gotten a half point haircut to 1.2%. So what's really happening there, and there is actually one more indicator about unemployment, and they say that the unemployment next year can go from 3.9% to 4.4%. So all these indicators come together. They tell you that yeah, things are looking pretty bad, and the soft landing is just a term. It's just a meme term for now. So if we keep going on, if the inflation does not come down, and because there are external factors behind it, America is not in the control of inflation anymore. They are relying on external factors such as the war in Ukraine. And then there is another geopolitical issue emerging in Taiwan with China.
Hmm.
All of these things can actually hamper the process of bringing the inflation down. There is a huge possibility. And I'm not saying it's going to happen. I'm saying the investor need to be cautious about it. And this cautiousness really drive the sentiment, whether we want to put money in something safer or something very volatile like stock, real estate,
Mm.
or Bitcoin. So, because of this cautious nature, and whatever happens, but people are cautious about it, they're going to be more invested in a non-risky asset compared to Bitcoin or something else. So, yep, there's not going to be a soft landing to answer your question.
Yeah, but that you kind of just opened up a can of worms there, Yashu. Like, if that's true, that these outside factors are going to be the main determinants of if we can fix inflation, and I think Jerome Powell thinks that with what they're doing with interest rate hikes will help. But let's say that stuff heats back up over in Europe between Russia and Ukraine. Let's say that the things start heating up over there with China and Taiwan, and there gets to a point where it's legitimately outside of the control. Do you think that there's an outside chance that even some of these more powerful countries, the civilians, start moving their stuff into crypto, start moving towards cryptocurrencies? Because even though, yes, the price might be down, I mean, those are going to be great buying prices. Also, the decentralized nature of cryptocurrency could be very advantageous to get away from the fact that the centralized US dollar, centralized British pound, Chinese yuan, all this stuff, these things are being so suppressed. Could we see the population actually start to address and move over towards crypto, or do you think at this point that's a little bit too far fetched?
That's that's too far-fetched because
Mm.
we have come a long way in the last decade, but
Yeah.
infrastructure-wise, Bitcoin is still not available to masses. I mean, even if you
Mm.
want to, if I'm somebody in Ukraine and I'm in the middle of a war and I want to just transfer all my bank assets into crypto, I'll need to make sure that I go through these KYC, AML. I have to go through these so many other things that is typical bank needs, and after that I buy it. There are of course so much
Mm.
resistance, and so you cannot just like anticipate people to simply jump on crypto, specifically when most of these people might not even know what it is properly. And so I think during the time of distress, people cannot go and start studying it for months because they need to get out quick. So the first thing they actually think about is the cash that is available in hands because it's easily accessible, which is
Mm.
not in the case of Bitcoin. So yes, people don't have the time to study it, and I think there will be adoption like that. Yes, we are looking at an adoption at a later stage, but not in a very sudden, quick manner. I don't think that is the case with Bitcoin for now.
Mm. That makes a lot of sense. With that being said, though, now we're having to put our faith in the Fed. They gotta do what they gotta do to fix inflation. Do you think that they have it in them? Do you think they have a good plan? What are your thoughts about their moves going forward with the limited amount of control they actually have? Do you have faith in that plan? What are your thoughts?
Well, let's not have faith in Fed because they have failed miserably in the last 2 years when predicting things. And it started with that meme thing they said, the inflation is transitory, when half of the world was screaming on the top of their lungs that it's not. And suddenly, Fed found itself, in the middle of new problems. The war happening in Ukraine, the food crisis, the fuel issues,
Mm.
and now they are, which is like I said, now the problems are not the one they have seeded. The problems are outside, and now they are simply reacting to whatever economic data they can see. And like I
Mm.
said, with going back to Volcker, even during the times of Volcker's rate hikes, this guy took two steps back. The central banker I'm talking about, who raised the interest rate in 1980s to bring the inflation down, he actually took the step back as well. So Powell, it seems to me, is simply following the same template. Of course, nobody wants to see a recession, and that includes him. But it's a
Right.
tough pill to bite, and he would read just strategies based on economic data. So let's not expect a Fed pivot. I think he will just wait and watch because their dot plot is also the same. I said it's 4.4% in 2022 and in 2023 is 4.6%. So we are looking at rate hikes. They are prepared to face inflation and to bring to 2% from the current levels.
Yeah, I hear you 100%. How much longer do you think then that this uncertainty will last? Like, do you think this is something that could run all the way through 2023 into 2024? Do you think it goes longer in 2025? Are you expecting us to have some form of relief in 2023? Because everything we're talking about here, this is big stuff. We got to be aware of it. But how long should we be waiting on to maybe look at a ray of hope coming on the horizon?
See, the question actually comes from a perspective when you are a Bitcoin holder or you are like exposed in the risky assets. So yes, if you're talking about that, and if you're thinking that yeah, there's going to be a light at the end of the tunnel, yes, there will be. Because see, even if you look at the summary of economic projection that came out yesterday, it is actually speaking about introducing less rate hikes as the year progresses. So by, if I remember correctly, it's 3.4% in 2025 compared to 4.6% by the end of this year. Sorry, 4.4% by the end of this year. So even they have completely, they have the idea that yes, we will be able to bring the inflation down within the next 12 months. And after that, we would need to tone down. We'll need to, scale back a bit. And during that time, yes, there will be enough opportunities for people who have invested now when the Bitcoin price was going down and they were buying the dip. I think it's going to be a good opportunity for them to really secure their profits. So yeah, I'm just speaking from the Bitcoin holders' point of view. But when I speak like completely macro, and if you want to talk about next 12 months, yes, cash is the best place to stay in, which is why I'm saying that yes, we anticipate that the Fed will scale back after a while. They'll dial down the interest rate hikes, but that thing is not going to be there until 2024, according to the dot plot.
Right. And that dot plot, I know some people don't really take that into account. I know Jerome Powell, even with his own words, said, hey, this is what we're thinking right now. This easily could change. But, one of my takeaways, and I want to hear what you think about this. One of my takeaways was this is going to be a fun next year. And by fun, I mean not very. It's going to be painful. It's going to have people reaching deep into their pockets. It's going to cause some families to be very concerned on if they're able to feed themselves and their children and keep a roof over their heads. Jobs will be lost. However, when you're looking at investing in things, so it's sad that I have to kind of put the retail investor on the side for a second and just think about investors. We're talking about whales, we're talking about institutions that are constantly trying to just get richer and richer. The investor loves stability of knowing what is coming next. And something that I thought that I saw with that Jerome Powell announcement was the clarity that he's giving about what the future looks like. We know pretty certainly the rest of this year, we're probably looking at a 75 and a 50 increase. And then over the period of next year, potentially an increased 50. Investors love knowing clarity. It might not be fun. It might not be what they wanted to hear, but at least if they have a feeling they can predict what the future looks like, they can invest wisely. Do you agree with that sentiment, or do you think that what just happened yesterday is going to cause a lot of people? Yes, we might crash down to 14,000, but do you think that could actually scare a lot of people and create more FUD in the market, or do you think that was actually a bringing of clarity for investors down the road?
Well, that really depends on if we are talking about investors who have stayed in markets for more years. Are they professional with how the market survive, or they are just newbie, or they are just FOMOing in and they are completely FUDing when the time comes? So I cannot actually answer the question that how people will behave. It's a psychological thing. But having a certain clarity, like I said, really comes when Fed itself is clear. Right now, Fed cannot be clear about their inflation targets. They cannot be clear about how much time they need to bring inflation down to 2% because, like I said, the factors are external. And that involves all of us. We can anticipate, dot plot can give us an idea about how positive they are thinking, what they are really thinking. But dot plot is not the final resolution. It really comes from the fact when the supply chain comes back to normal, when the war is finished, and when all the problems we are seeing across the world, in terms of economic collapses in Sri Lanka and Pakistan, the China's real estate bubble issue, the UK inflation, the Euro gas issue, and then the inflation in the US. And so I think we cannot actually predict. This is the most, I have to be sorry to say that, but this is the most unusual times in economic history we have faced after the World War II. There has been nothing like that. We have not had this, great money supply in trillions of dollars, even in the time of Volcker, which I'm quoting repeatedly. We did not have that money supply. This is a very, very unprecedented time, and which is why the best bet for any retail investor right now, if they are, if they don't have the appetite for high risk, if they don't have spare cash to, they cannot actually bet their money in. So, which is why I said, it has to be in markets that can guarantee you certain returns, which brings me back to yield, bonds, basically, sovereign bonds, government bonds, and any kind of cash settled or cash related instrument. This seems to be the only safer choice for now.
That makes a lot of sense. Well, let's transition here a little bit. Let's talk about regulation here. That's another thing that's going to be hot coming into the next couple of months. We got a lot of people working in Washington. We got a lot of people working around the globe, trying to figure out cryptocurrency moving forward. And price aside, what do you think the future of crypto regulation looks like, not only in the United States, but maybe worldwide? Are you in the moment thinking that all the regulations should be good? Is there any particular regulation you're concerned about that people need to know about and maybe they haven't heard of?
See, I would just first clear that I'm in favor of regulation because it actually makes the space more safer, and it makes sure that all the investors have an insurance net. So in a way, it leads to adoption. But yeah, it comes with its own sense of, and we have been told that crypto is a breakaway technology. It has to be this anarchic version of finance. So personally, I don't think that regulation can be a bit of an issue for crypto. As for how these countries are gonna deal with it, for now, I think we in that study stage. People are looking at it. Some governments are outright banning it. Some are trying to study it. Some are just using old laws or to bring in cryptocurrency in the new law. So everybody has their own opinion. There is no unified response so far, and it clearly depends on how us crypto lobbyists, and how we can fund this market, how we can talk about a unified law, because we're talking about a global technology like internet. So in my opinion, I think US can be a benchmark, which it has failed so far to become. And
Yeah.
if US takes a good stand about it, if it really clarifies the regulation, because it is taking its time, yes, but when it really comes up with a clear methodology about every kind of asset out there, I think it can give other countries to really follow the lead. Because yes, emerging economies, they don't have the resources to really go after this technology and employ people, because they are already running behind so many other things, which is why we are seeing India imposing this really completely unfair 30% tax on crypto transaction. China is completely banning it. So yes,
Yeah.
I think US has to lead the market moving further. But if the regulation comes, I think it's going to be good for everybody.
Yeah, I think you're right. I mean, it's one of those things we've joked about it on our channel, Coffee and Crypto, that the word regulation is like a lot like the word moist. No one wants to hear it. But I agree with you that I think it comes with adoption. It has its side effects. The question is how severe this is messing me up. How severe the regulation is. And currently, I know in the United States government, there are certain people, for example, Senator Elizabeth Warren, who would love to have very, very constricting regulation on it, and I'm very much hoping that we get some balance, make sense type of regulation. I love the fact that the SEC, Gary Gensler, as horrible as he is for the crypto space, has conceded Bitcoin probably does belong to the CFTC. But I'm going to transition to kind of change it just a second. I want to get your take, unless I see some questions in chat that we can finish off with. I want to get your take on Ethereum. Speaking of regulation and speaking of Gary Gensler, Ethereum's had a little bit of a roller coaster ride here over the last month or so. We finally got that Ethereum merge, and there's a lot of fundamentals that could lead to it being one of the leaders of this next season. However, they've found themselves potentially in the crosshairs of Gary Gensler and the SEC. What are your thoughts when you're thinking about regulation and you're thinking about what we're hearing from Gary about Ethereum? Do you think Ethereum could be in trouble, or do you think this is not really something Ethereum holders should worry about?
Well, I cannot take a statement with a grain of salt. I mean, it's just a statement. It's his opinion. Like, people before him have given their opinion, and they are getting completely wrecked in the code because of that. What Gansler is saying is that because stakers are in America, they are officially the property of the US, and that is, I don't know how to pronounce that, but he is simply to equate that. He's saying that if you rent your property, if you rent your real estate to somebody, that property is mine. So there has to be some logic. I think he's a big guy. He has reached to such a great chairmanship level. But to really speak like that without even understanding, it simply says that he does not understand things about Ethereum itself. He does not understand the concept of having decentralized nodes. He does not understand how staking works. He just
Yeah.
thinks that it's he just read somewhere centralized maybe. So yeah, they have to be treated like XRP. Man, I mean, what should I say? I mean, it will be controversial, but
Well,
yeah.
I
But I don't think. But yeah, to answer your question, I'm sorry. To answer your
yeah.
question, I don't think it means anything in the longer run. I mean, it's
Okay.
just one man speaking something about Ethereum, and he's gonna retire. Somebody else will come.
I think it's interesting that because I think you're right. I think there's aspects he doesn't understand, but I don't know if you remember this. One of my coworkers is reminding me last year. There actually was some bullish narrative when Gary was appointed to be the head of the SEC. His background, he actually used to teach blockchain technology. We thought, here's a man with some fundamental understanding. He should be pro crypto, and he's been nothing but a deviant the whole time he's been there. He's been anti crypto, even though he's not necessarily the worst for Bitcoin. When it comes to all the rest of them, they're just always looking over their shoulders. Oh, is Gary coming for me today? We thought that was going to be bullish, but so I love what you're saying there. You think that he maybe understands blockchain technology, but he doesn't understand the decentralized nation of staking and what that means different than securities.
See, blockchain technology itself very new. There is no expert out there. I really hate the term
Mm,
expert when people say I'm a blockchain expert. How can you teach blockchain technology when blockchain itself is evolving? Every time we look at it,
that's
there's
a
some
good
new project
point.
coming up and it's introducing a new form of. We did not know proof of stake like a couple of years ago. Now we know. I don't know what he was teaching, what he
Wow.
learned, but I think the book he had from where he learned from was the same book you and I read. But yeah, he stopped reading because he got under pressure. Maybe he just stopped reading. He just stopped getting updated by what's happening in the space. So I'm not gonna
Uh,
call him an expert just because he was teaching some people. Nobody's an expert. It's just a foul thing to say that you're an expert in blockchain technology.
That's a good point, Issue. That I'm going to steal that point from you when I'm talking about it. I got to sit in the room during one of Charles Hoskinson's meetings, where he pretty much
Wow.
echoed kind of a similar thing. And everybody knows how brilliant he is, but he was saying like, "Listen, dude, we're 3 5 years from fully understanding what we have. Like, we have so many things that are going to come out here over the next 3 to 5 years, and then the 3 to 5 years after that will blow that stuff out of the water." So I could not agree with you more. Blockchain, it's really hard to call yourself an expert of blockchain with it ever evolving. It seems like every single day. Well, I'm going to look at chat here, Yashu, and we're going to be wrapping this up. Let me see the questions. I did see, a similar question to what I asked, and I told you beforehand. You said I got your name correct, Yashu Gola. You said not a lot of people get that correct. I'm a I'm a I'm a name obliterator, right? I know I'm going to obliterate this one. Sri Abhi Taya M. Maybe you could. I don't know. Like I'm so sorry. Is that Sri SRI? How do you pronounce that?
Sri should be Sri.
Sri. I'm so sorry. I'm
Yeah.
quite sure. He pretty much asked the same thing I was asking. Will the government regulation in the coming years squeeze the blockchain utility? Kind of similar, but maybe update a little bit. Do you think it will squeeze the blockchain utility and maybe squeeze it to be more powerful? Maybe squeeze it, restrict it. What are your thoughts about that?
I would always say that look at internet. Yes, people have controlled it. People have imposed new regulation on the top of it. But then you also have secret things. I'm not trying to speak like anything illegal here, but the people who want to step away from government, who wants to have a private channel, they will still have it.
Hmm.
So regulation, like I said, it does not really hamper growth. It actually makes it safer for other investors to come. It makes people, feel more confident about investing. So some kind of regulation is good. Otherwise, we'll be looking at all the frauds we have just witnessed this year. All the withdrawals and withdrawal tracks and the DeFi exploits. We don't need that. So I think having regulation will actually solve the problem than hamper it. So yeah, that's what I think.
Hmm. Well, Yashu, thank you so much, man, for coming on today and joining us. So many great nuggets of wisdom from you. Everybody watching right now, not only should you like this video, subscribe to Cointelegraph, make sure you follow Yashu on Twitter. You can see right now his Twitter handle right there. Follow me as well at Tims_TA for more crypto updates. Yashu, it's been a pleasure, man. I'll see you next time we have you on here. We'll have to get you on back real soon.
Thank you, Tim. Thank you. It was great talking to you.
Yes, and everybody else out there, make sure you tune in every single day for more content just like this here on Cointelegraph. And every Thursday, you tune in at 12 p.m. Eastern Standard Time for Market Talks. That's all I have for you guys today, but I will see you in the next one. Peace.